feeling about the sensational headlines projecting doom and gloom in the real estate market? Sellers, are you worried that you missed the multiple offer market? Buyers, are you frustrated and just waiting for the prices and the interest rate to drop before you make your move? Well, we are here to ease your worry and frustration by giving you the straight story using the current stats and trends in our local SLO County real estate market. Be sure to stay tuned to the end when Darryl provides us with the best available interest rates and loan options. Serena Roda here with my teammate and co-host Jennifer Dawson at Platinum Properties. We are fortunate to have lending expert Darryl Stolz with us from Pacific Trust and Mortgage.
Thank you. Good to be here.
Thanks for coming. He's here to provide some insight on the pre-qualification, pre-approval process, the current loan interest rates and options available for buyers on the Central Coast, and he'll also fill us in on projections for the interest rate trends.
Thank you so much for joining us today, Darryl.
It's my pleasure.
Yes, we're excited to have you. Before we jump into all of your great info, I wanted to share San Luis Obispo housing market stats. We're just going to look at residential only for February. The median price held at $750, which was exactly the same as last month. And it's really interesting to look at it now compared to last year. Last year, the average price was $775, so we've seen a 9.6 decrease from last year at this time. For months of inventory for February, we were at 8, but this morning I reran the numbers and we're down to 4.
Wow.
So we're seeing a big drop in that already.
Short supply.
Number of sales increased to 146. Last month it was 117, so that's good news. See a little more activity on the market. Days to sell was 45, although this count was based off of escrows getting opened in December and January, so we're expecting to see this number drop for March stats because we're back into the multiple offer market again, so that's exciting.
Yes. We definitely have noticed that here at Platinum Properties, the RODA team had 5 listings in the last 2 months. All of them received multiple offers, ranging anywhere from 2 all the way up to 8. And 4 of the 5 listings ended up in overbidding scenarios. So Jen, can you share a little bit about your experience with your listings and if you're noticing any trends?
Yeah, definitely. So the 2 listings that I currently have, they both received multiple offers. One even received 3 all cash offers, and it's going to go for 6 figures over, which is pretty crazy. The trends showing heading into a spring market that the number of sales has improved by 25% over last month in a multiple offer market is back. Another historical trend, just to keep on the radar, is that the market typically flattens before you're going to see an upward trajectory in prices. So for all of you buyers out there, if you're waiting to see prices drop, the Central Coast is in its own unique little bubble, and we may have bottomed out. Serena, what do you think?
Well, Jen, that sounds promising for sellers who are priced appropriately. For buyers out there who are waiting for the market to crash, hopefully those trends are piquing your attention. The low inventory is even lower when we're considering first-time home buyers, right? So
there's more competition, the hierarchy of buyers.
Yes. And we're eliminating a lot of the homes that are over $800,000 if they're in a 55 and over community, or now even condos. A lot of home buyers post-COVID are working from home and want to have a single family residential home on a small lot, maybe with some outdoor space versus a condo. So as Jen mentioned, we did run the stat today again for inventory, which is down to 4 months. Compared to what it was running at 8 months in February, so just in a short few weeks, down to 4 in SLO County.
What would you consider a balanced market versus one with short supply?
6 months.
That's what I was thinking.
So right around 6 months. Once again, the lower inventory is creating that competitive market that you were talking about, Darryl. Jen and I would like to share 3 factors that would help them prepare for that.
Definitely. Factor number 1 is writing non-contingent offers. When I'm thinking non-contingent, what comes to mind first is to not have to sell a home. I've had several clients that have been first-time home buyers and they've beaten out seasoned buyers because simply they don't have a house to sell. And in some of the cases, their down payment has been less than what the other offers have been, but just simply that they didn't have a house to sell, they got the able to close escrow and get their home. And then also, when we're talking about contingencies, in the last few years, we've seen buyers release all of their contingencies with the offer. That is case by case, and I would definitely recommend chatting with us before you consider writing an offer like that, because it depends on what disclosures are available, what reports, and how the loan is structured.
It's very important in a situation like that to discuss that with your lender, because if you're removing contingencies, for instance, a loan contingency
Right.
or an appraisal contingency, we would tell you that that's risky.
Yeah.
So we, on our end, really have to be sure about what we're doing, and by putting a file through underwriting first and doing a lot of the legwork up front, and by following a checklist, that type of thing, we as a lending company can be more certain of that type of process and more confident, so that we protect your buyers and their deposit.
I love that, Darryl, and we're going to jump into more about getting pre-qualified and pre-approved, and Darryl will explain what the difference is. Serena, just back to these offers of no contingencies, it makes me think of the listing you had at Arena. I believe there were 8 offers, and then the one that we ended up closing, it was cash, 14 days, right?
Yes.
Yeah.
It was an all-cash, 14-day, non-contingency offer on an as-is definite fixer property.
Yeah.
But the sellers were proactive and had many of the reports, pretty much all of the reports available to the buyer, and the buyer was able to sign off on all the contingencies, knowing that information going into it.
Yeah.
Granted, it was all cash, so it's not dependent on the loan approval and the loan process there, but it was very quick.
Yeah, so
Cash is
buyers
king.
out there, yes, cash is definitely king, and buyers out there, we always encourage you to consult with us before moving forward with an offer with releasing all contingencies.
I'd like to share factor number 2 that will help our buyers write a competitive offer would be receiving the alerts for the coming soon listings on the California Regional MLS, which can be done by contacting a local realtor such as Jen or myself. This will help you get scheduled for a showing sooner than later and help you decide whether or not you'd want to make an offer on the home. So recently, we've noticed buyers who wait for a week and even a weekend in some cases have already missed their opportunity, as the sellers have received offers because they're priced right, and you as a buyer might miss your opportunity to even see the home.
And I've already seen that with the last few listings I've had. I've had agents call me and their clients are upset because they didn't get to see the home in time. They just saw it when it hit the market, and just online. They didn't have the coming soon feature. They didn't even have a portal set up, and so it really does make a difference with how fast our market moves around here.
I agree.
Jen, can you tell us about factor number 3?
Yes, I would love to. So factor number 3 is to get pre-qualified, or better yet, pre-approved by a lender such as Darryl over here. Darryl, can you tell us a little bit about what is the difference between getting pre-qualified and pre-approved?
That's a great question. You know, pre-qualified is we talking. You know, usually that starts with a phone call, an upfront interview where I'll ask questions. Number 1, do you have a down payment saved? Number 2, on a scale of 1 to 10, 10 being the best, how would you rate your credit history? And I like to listen. You know, the ones that say 9 or 10, I have good credit, that type of thing, you can tell when they're confident.
Yeah.
The ones that say, well, maybe a 6 or a 7, and I'll say, okay, well, why would you say that?
Yeah.
And again, I like to listen. I like to let them talk. I'll ask them how much money they make, and then, you know, I can begin to do some figures based upon this much down payment saved, your other monthly payments in terms of liabilities, credit you might have, and the income that you produced. You qualify for X amount of dollars. That's pre-qualification. To go one step further, and what is actually better, is a pre-approval. That's where we run a credit report. We take a loan application. In some cases, we'll put that loan application into underwriting. We'll run the automated approval, and the computer will weigh income, assets, credit, and property, and give us a decision like approve eligible. That loan can be sold and banked in the secondary market, and we as a direct lender can be certain of that process, that we can fund that loan in addition to following a complete checklist and making sure that we have everything from that client upfront.
That's great, and I was gonna ask, have you seen an increase in buyers getting pre-approved and pre-qualified with our changing market with the rates going up?
No doubt about it. Our business can be a little bit seasonal sometimes, and with rates coming down a little bit in January, that definitely has triggered more activity. The market is always changing, not just the real estate market, but interest rates and things like that. So you've definitely seen an uptick in loan applications, that type of thing, and people that are re-upping their pre-approvals, making themselves ready. And we're seeing that more of that demand is coming back as interest rates, although they've been fluctuating, have been coming down a little bit.
That's great. So if someone wants to get started with all of this, how do they do that?
The best way is to have them reach out to one of you or to me, and we initiate that process. Sometimes it begins with a phone call, but I ask that they call, text, or email. We begin that conversation and fill out a loan application either online, or we do that by phone, and in many cases make an effort to meet with them in person. The more planning that we can do up front to help that client, the better. That way we're more prepared.
Yes, I love that. Thank you.
Some buyers are hesitant to contact a lender, maybe for fear that it might cost them something. How much is it for someone to get in touch with you for pre-approval or pre-qualification?
That's a great question. I'm really glad you asked it. I get paid when I fund a loan, and it's a process. For some people, it can be really quick. For them to go through the pre-approval process and to find that home of their dreams, it can happen very quickly. And for some people, it can take months, in some cases years. There is no charge to come and see me and to consult.
So it's just how we work too.
That's right. And so I'll tell people, please come in for a free 1-hour consultation. Certainly if it takes more time, we are very generous with our time. That we want to establish what their comfort level is with the monthly payment and build around that so that they can own the home and so that the home does not own them. Anyway, that there is no charge for the pre-approval process, and really it is the starting point so that we can begin to help them with the widest array of products available.
Nice. Thank you.
Another question I've had by buyers recently is they are waiting maybe a year, let's say that's their projected date of wanting to start looking. When would be the best time for them to get in touch with you?
Sooner the better, because in some cases we'll begin again by running that credit report. If we run the credit report, there might be things that are unexpected. Perhaps they have some collections or some charge-offs, some things that they were not aware of. It gives us time to respond to that and to help them to clean up their credit in some cases. Or it might be that they're down payment challenged, that they need to save more money to afford the type of house that they really want. Not everybody knows that the down payment can be entirely gift. There might be a family member out there that's willing to help them. So they'd be able to have that dialogue with their parents or grandparent, aunt, uncle to help firm up that down payment in advance is great. And some people might decide to borrow from a retirement fund, like a 401k, rather than liquidating it, which would cause a taxable event. They can borrow against it and then pay it back. It becomes an investment to themselves. Again, just being able to spend time to firm up the down payment, clean up credit eventually, and sometimes income to qualify can be the challenge. It might be somebody that's self-employed, and it will give them time to prepare their taxes. It's tax season right now. Or maybe it's a good idea for them to show more income for this year 2022 so that they can qualify better to buy a house this year in 2023. There are different tricks of the trade that we can share with our buyers to help them to put their very best foot forward so that we may help to optimize their purchase.
Love that.
Especially since it's such an individualized process. Every situation is different, and you have all the tools and the knowledge to get them to the point where they know what they qualify for, so that they're looking at a home that is appropriate for them and in their price range.
No doubt about it, a loan is like a puzzle. And so we look at that and determine based upon their credit score and the amount of down payment they have saved, whether it be a conventional loan or maybe a governmental loan. We also have private money available. No matter what their situation is, or if they're self-employed, it might be a bank statement loan. Because maybe the tax returns don't clearly indicate that income they need to qualify. Having that consultation up front and being able to draw from a wide array of products is a big advantage with our company, Pacific Crest Mortgage. And that way we can help to provide the best solution possible.
Yeah, to me, you have to do that before you start looking at homes with us. I've had clients in the past that have had a number in mind, but they haven't done the pre-qual or pre-approval process, so I went off of what they told me when I looked at homes, and then they actually chat with the lender after we're out, they find out, oh no, I can't afford this, and then, puts a damper on the whole process. I always recommend you try to do that first.
I agree.
Darryl, can you give us a quick comparison of what happens to a mortgage payment if a buyer purchases a home today at current prices and interest rate versus waiting for the interest rates to lower if the housing prices increase?
That's a big question. Real estate markets are cyclical. I've learned that along the way. I've been through many different cycles. This might be a good tool to cover that.
Okay.
What looks like a smile here could be the cycle of a real estate market. It's pretty hard to establish as markets adjust. It's difficult to determine where we are at the bottom of the market. And for this example, I'm drawing upon Case Schiller and also MBS Highway, my research. What happens is that as markets continue to adjust, and keep in mind interest rates over the past year doubled. I mean, they went from roughly 3 or 4% up to 7% and above in some cases. We've seen the rates also come down quite a bit in January, but guess what? They were back up in February. So they will continue to adjust, but we think as we move through this year, they will probably come down third or fourth quarter. With this, I would like to say use the current market as an opportunity. A good time to buy a home is when you need a home. You can find a good deal on a home even in an up market. I don't think we're in an up market right now. I think we've been adjusting a little bit based upon your comments earlier about median sales price. As the demand softened when interest rates came down, I think the market has been adjusting a little bit. And markets, by the way, are very localized. My example is based upon national data, and keep in mind for more localized information and data, turn to one of the two of these experts. They really are the local experts, and they will tell you much better what's happening in our market. But when you look at a market, what happens, it's very difficult to determine when the bottom of a market takes place. And I learned that from being a real estate appraiser, that sometimes if you look back maybe 6 months later, you can say, guess what, that's when our market hit the bottom. It's impossible to say when you've reached the bottom of the market. We're not that good, nobody's that good, right? What I think is happening is that our market is adjusting, and what is very common is that after you've hit the bottom and rates come down, you might end up over here after the bottom where a seller is more confident, there's more competition, and guess what, there's lower rates. But by then, when everybody's jumped back in, you've already missed the bottom. I think we are somewhere over here, and we may already be at the bottom. We don't quite know, but we're somewhere in between here. Now is the better time to buy a home because sellers are potentially more fearful. There's less competition and potentially more choices. The last low that we had was probably January of 2012. And guess what happened? In the next year following that, appreciation nationwide was about 8% in 12 months. Inventory was over 2.4 million listings at that time in 2012. Right now, it's less than 1 million in 2023, and half of those listings are already under contract. As you were alluding to, even in this market, we're still dealing with short supply. A good time to buy a home is when you need a home, and if you're in a situation maybe more before the bottom of the market, there might be more potential to negotiate. And it's a good time if you have a situation where there is less competition and maybe you do not have a multiple offer situation. Even if you do, ask for that seller credit. And we can work with the seller credit very often up to 3% for the loan, very commonly. And that will help to cover your closing costs. It might help you with an interest rate buy down, whether it be a permanent buy down or a temporary buy down. If you were to even get a 2% seller credit on a $500,000 house, that's $10,000 to work with.
Yeah, I mean, I wrote that when I worked with you a few months ago for a buyer, and it was the first one I'd written in 2 years.
That's right.
For a credit. I'm not used to writing those in. So it just shows how different the market is.
I agree. It's always changing, and for the most up-to-date information, that's where it really helps to have a local expert like one of you helping the buyers, and especially where affordability is an issue, it becomes very important.
I'd say so.
Thanks, Darryl, for all that great information.
My pleasure.
The burning question for today is when, if ever, can we expect the interest rates to come down?
That's a big question. We don't quite know. But when you hear about the Fed raising rates and that type of thing, just as a reminder, that's the federal funds rate. That's the overnight rate that banks charge one another to borrow from one another. And that also affects home equity lines of credit, credit cards, and auto loans. Mortgage rates are mutually exclusive. They're separate. They're different. Mortgage rates tend to follow inflation figures. With the Fed tightening the Fed policy, that type of thing, the inflation figures are starting to come down. And as a result, interest rates can be up, they can be down some days. But as a result, the inflation figures are starting to come down. So we anticipate that mortgage rates will probably continue to fall more towards third and fourth quarter of this year into the following year.
I have a question. We went to training this past January, and it was mentioned that they could go into fours next year. What do you think about that?
I think it's entirely possible. I think that interest rates were artificially low during COVID and leading up to it, that type of thing. I think it's highly unlikely that we will see interest rates in the 3% range again. For them to go lower than that, we would have to be in a negative rate environment, like they have in Japan, for instance. It would be highly unlikely. The markets have to stand on their own because the Fed was buying all the paper, which was keeping rates lower. What has happened has been an over-adjustment, like a pendulum shift. As a result, they don't get it right the first time, not so often. So what will happen is that with these shifts, it will over-adjust and then it will come back down. And the market and interest rates will eventually normalize, and I think we will see that in the future.
Darryl, do you have anything else that you would like to share today that you haven't shared already?
I'd just like to say that I think we're lucky to be in this industry, and as realtors and lenders, I think this industry is awesome. There's nothing better than helping a first-time home buyer to buy their first home, and it's absolutely the best way that I know to build wealth is to own real estate. I would want to convey to our audience out there that the process should be fun and exciting, and we can help with that. I also feel that it's probably the biggest investment decision that a buyer has ever made, or a borrower. It's not something we should underestimate. With careful planning, and if we're good listeners, we can help them to customize a loan and a solution, and you guys can help them to find the perfect home. And if we do those things well, and if we all work together, there's nothing better. And this industry is really a lot of fun to be a part of.
It is. I love it. So much fun. So for all of our viewers, if they want to get a hold of you, what is the best way to reach you?
Best way to reach me would be the phone, text, email. You can certainly reach me through the two of these ladies. I have business operations not only in San Luis Obispo County, but throughout California and Los Angeles County.
Thank you.
Thank you.
Jen, I have one more question as we wrap up today. If there are sellers out there who are on the fence about listing their home, do you have any advice that you'd like to share with them?
Yes, definitely. I always like to take it case by case and let my clients know, just consult with both of us just to make sure that that is the best decision moving forward. Thank you, Darryl, so much for all of the wonderful information you gave us today.
It's my pleasure, and thank you for having me.
Yes, of course. We look forward to having you on here again next month for another market update. Thank you all so much for tuning in, and be sure to check out our latest episode about Charity Chat.